good morning. Happy New Year. I'm so glad that we're here in 2023. So we have another full year. That's 260 working days. That means that we have 260 days to have current and relevant business conversation here on Business Morning. You're welcome. I'm Ini John Mekwa. We did all we could in 2022. We will do better in 2023, God helping us. And we promise to always keep the conversations here current and relevant, very, very useful for you. So you're welcome to the show. And this very first one for 2023, we're going to look a little bit backwards and then we will move forward. One of those conversations we'll be having today will be the 2022 finance bill. That's how the budget will be run for the year 2023. So, and you might wonder, how does that concern you? Well, you know what we do here? We always bring it back to you, ensure that it does concern you and show you how it concerns you, how you can adjust to it. So we'll have that conversation. Also, we'll be looking at AfCFTA. It's 2 years since that was pronounced. In 2020, it was pronounced as the year of AfCFTA. So how is that going? But anyway, before we delve into all of that, let's see a little bit of what happened towards the end of last week at the NGX. That's right, a colorful closing of Gong there by Kemi Adetiba and Shola Shibowale, both of them from the entertainment industry. You want to ask what they are doing on the investment floor? Well, everybody has to invest. Well, just to let you know that the NGX All-Share Index, which tracks general market movement of all listed equities, opened the year at 42,716.14 points and closed at 51,251. In fact, the NGX was one of the best performing last year, both in Africa and I think the third globally. So that was a 19.98% raise as against 6.07 that was recorded in 2021. Furthermore, the market capitalization, which is the total value of all listed equities on the X, grew by 5.619 trillion naira from 22.296 to 27.915 trillion naira, representing a gain of 5.619 trillion naira. So we have the Chief Executive Officer, Temi Kokola. He was there, obviously, at that event, and he proudly tells us that we're looking forward to an even better 2023.
Markets. It was probably on record one of the lowest years we've had for foreign capital into the markets, but the local investors did pick up a lot of that slack. So that's a very strong thing. We expect that to continue into next year. We also do expect that foreign capital should return next year. And we hope that will be a very central part of that. The more quality companies we can bring to the market, we'll look forward to working with the government. The government will probably need to find means and creative ways to raise capital, to whether it's to fund budgets or to do many of the strategic ideas and initiatives. We expect that the capital market should be a good place for that to happen. And then thirdly, I think for next year, we're expecting that we can come to market with quite new, I would say, strong products. Looking at digital assets, looking at how we can help technology companies and that sector to raise capital for a lot of their growth, and also looking forward to very strong partnerships as well.
All right, so now let's get to some serious issues. We're starting the year on a very serious note. One of that is the finance bill. On the 15th of December, the Federal Executive Council approved that finance bill designed to support the implementation. We've seen it go through the lawmakers and now awaiting the president's assent. And this is supposed to, implementation is actually supposed to start on the 1st of January. Now, how important is this finance bill? Why are we discussing it? Remember that this is what guides the implementation of the budget. And of course, if we talk about the budget, you know that's the financial expenditure for the year. Well, to help us understand some of the details and adjustment that may take place on this bill is Dr. Muda Yusuf, the Chief Executive Officer of Center for Promotion of Private Enterprises. He's here with us in the studio. Good morning, Dr. Yusuf. Happy New Year.
Happy New Year to you.
Happy New Year. Well, last year, economically, personally, nationally, how would you capture 2022?
Well, it was a very challenging year, but I think for every business or individual that survived it. I think we should congratulate everybody for surviving 2022.
For surviving 2022.
It was really very challenging.
But wasn't it also an opportunity for a lot of individuals and businesses to discover a new side, a new way of doing things, you know, especially those who have survived? You know, they've had to maybe rejig their plans, their strategy, one way or the other, to be able to get through those difficult times.
That was the source of the resilience, because the survival itself is the outcome of the resilience that the Nigerians and businesses showed. Because if they were not ingenious, they were not very creative, there was no way you could survive such a turbulent year. So, I mean, many businesses have tried a lot, in spite of all the challenges, all the headwinds, macroeconomic, regulatory,
and
structural.
And we still woke up to the new year to the queues at the filling station.
Well, it's a major problem.
Yes, it is.
And unless we deal with the fundamentals in that sector, I'm not sure we get out of this crisis of queues.
Okay, so now let's look at the finance bill. First of all, help us to understand the importance of this bill.
Well, the bill is important because, you know, the government is concerned about revenue, you know, and about the fiscal space generally. So the whole idea is that for each fiscal year, there has to be a package of measures, fiscal measures, to boost revenue and also ensure that we move as much as possible towards fiscal consolidation. So that is the whole essence. So it has quite a number of provisions, especially around taxes.
Exactly.
Because the whole thing is about taxes. But what came out of the bill that we are about to discuss is not too palatable, at least for people who are in business, and ultimately even for the citizens, because the challenges are huge enough. We are carrying over a lot of problems for 2022. We don't want to see such problems compounded in 2023. So that is why the finance bill and this conversation is very important.
Okay, so let's start with the imposition of the 0.5% levy on all eligible goods imported into the country.
Well, generally, this bill has far-reaching implications, because it's amending a whole lot of legislations. It's amending the Companies Income Tax Act, the Custom and Excise Tariff Act, the Personal Income Tax Act, Petroleum Profit Tax Act, Stamp Duties Act, Value Added Tax, Capital Gains Tax, Corrupt Practices and Other Related Offenses, and Public Procurement Act. You can see that the finance bill is wide-ranging in its application. So that is why we have to take it very seriously. Now, coming back to the new taxes that are imposed, quite a number of them really, this is just a few. We are talking about imposing 0.5% levy on all eligible goods that are imported from outside of Africa. You know, and when we look at the totality of the burden that businesses are facing, already we have 0.5 ECOWAS levy, which we have been paying for quite a while. Now, this is a new one, and the government is saying that they want to use this to fund their international obligations, to ADB, to World Bank, all sorts of international obligations that you have around the world, you know. So that is the essence. And the argument here is that we have enough burdens already. If you look at the gamut of taxes that business, because this is also going to fall largely on businesses. Consumers, producers, investors.
But on the other hand, isn't it supposed to, like, since it's trying to discourage importation from outside Africa, isn't it supposed to help Africans, Nigerians in this case, look inwards and reduce the consumption and the pressure on the naira through the dollar that we've been having?
Well, not exactly, because we are talking here about international trade. We are also hoping to export outside Africa. And there are some critical inputs that we need that don't exist in Africa. And in any case, we have a gamut of taxes, import duty levy that are already existing as we speak. Now, if you take a look at the range of taxes that businesses are already paying, we have the company tax, which is 30% already. You have the tertiary education tax.
That's kind of quiet, you know. A lot of people don't talk about it, even though it's being paid.
Yes, 2.5% on company tax. On company profits. You have NITDA levy, 1%, also on profits. You have the Naseni tax, 0.25%, also on profits. You have police trust fund levy, 0.005%. You know, you have the Nigeria Content Development Levy, 1% on all contracts that are awarded in oil and gas sector. You have the NSITF, 1% of payroll. You have the Industrial Training Fund levy, 1% of staff cost. So if you have all of this, in addition to issues of import duty, all other levies that you have to pay, and we are now coming up with this kind of bill in the finance bill 2022. It's a lot of pressure. And what is even more disturbing is that the National Assembly did not give room for engagement with stakeholders. How can the Senate give 24 hours notice for public hearing on such an important bill that is touching on very vital legislations? 24 hours. The public announcement came on the 21st. The public hearing was 22nd. I mean, how do you run a democracy like that? So
now we know that the bill is awaiting the president's assent. That's where we are now.
That is where we are. And our appeal is that the president will withhold assent on this finance bill.
Okay, because I wanted to ask, what are the possible scenarios? Because you were talking, but it doesn't seem like a lot of companies. It seems a lot of companies have adjusted, because I know most of these are not new. The tertiary, the
those are the ones that are existing.
Exactly.
But you have a whole lot of new ones inside this finance bill. We are talking of imposition of excise duties on all services. Whether you are television, whether you are radio, whether you are ICT, whether you are hospital, all services are now liable to excise duty at a rate to be determined by the president. That is very significant. And if you don't engage properly on this, it's going to cause a whole lot of problems for investors.
So what's the way out?
This is not a good way to start a new year.
What's the way out?
The way out is to engage. We are in a democracy. That's why we are putting it out there for purpose of conversation. Ideally, there should have been a robust public hearing on this, so that we can have a lot of input of stakeholders. I mean, we are talking of January to December cycle. It's not at all cost. If you have to delay for a few weeks to tidy up some of these things, so be it.
Okay.
The House of Rep also even allowed for some, they were a bit more generous. They gave 3 weeks for the public hearing, only for us to hear that the bill has been passed, even before the date of the public hearing.
So doesn't this tell us that, I mean, we've seen numbers of our debt servicing and revenue for the government. We've seen the impact of oil theft, even though we've seen a bit of recovery. We saw a little bit of recovery in the last 2 months or so. Doesn't this say that perhaps the government is just looking for ways to fund the budget?
They are looking for ways to fund the budget, I agree, but we need to do it strategically, so that you don't cause even more problems for the economy. I mean, we should not overload the donkey, as we say. Already these businesses are going through a lot, both within the tax space, within the fiscal space, within the macroeconomic space, within the regulatory space. So what will you do? In fact, there is a research that has said that the taxes that hurt the economy most, that affect economic growth the most, is corporate tax. The way we are going now, the total corporate tax, if you add all of these additional things, we'll be getting close to 36%.
How is it in other countries? I think you did hear corporate taxes by country.
Yes.
In the UK is 19, Saudi Arabia.
Yes, look at UAE, for instance, 9%. Do you now wonder why so many investors are in UAE? Look at Tunisia. Look at even UK. Look at Mauritius, 15%. Egypt, 22%. China, 25%. Ours, the way we are going now, by the time you put everything together, it will be getting to over 36%. And you cannot grow an economy if you are putting too much pressure on investors.
I guess it's one of the reasons why Nigeria is not participating in that global minimum tax.
Yes. The pressure is too much. And globally, the best way to grow an economy is to support those who are investing. But here it is the exact opposite. You are piling a lot of pressure of tax on investors and subsidizing consumption, which is a complete contradiction. So the global best practice is to ensure that you are a bit more liberal with those who are investing, because it is through investment that you can grow your economy. If you grow your economy, you generate more revenue ultimately. On top of that, you create more jobs.
What would liberal look like in Nigeria at this time?
At this time, we should reduce all this, quite a number of these taxes on investors. We should look at it, particularly some critical sectors of the economy that are critical to job creation, critical to economic inclusion. That is what it should be. We should not be going to 30%, 35%. By the time we have not added taxes by the state governments, so we have not added taxes by regulatory agencies. Because for every business that is regulated by any government, there's a lot of money that you also pay. So this pressure is too much. That is why we are advising that let us go back to the drawing board. The president should not rush to assent to this finance bill. The National Assembly should, and that is the due process anyway, that is the legislative protocol. If you have such an important bill, you should speak to stakeholders. That is why they are our representatives. Then what is the essence of representation in a democracy? When you are giving 24 hours for people to respond to this, before people even knew, the thing has been passed. And the House of Reps that even was generous to give 3 weeks, I think maybe by virtue of pressure from the Senate, they also passed it even before the date of the public hearing. The public hearing was supposed to be 13th of January.
So doesn't this also talk to or speak to the issue of expanding the tax net?
That is what it should be.
Because even last week, we also discussed the issue of insurance.
Yes.
And then we did see that out of about, is it 20 million cars in Nigeria? I've forgotten the numbers now. Just about 14% are insured. So, and now they're increasing the number of the third-party, vehicle insurance.
Yes.
Now, if we were to expand the tax net, then I guess the government will even have more revenue without having to increase the price that individuals would have to pay.
That is what should be.
But we have technology, we've had new inventions in the tax space. Is it not being used, or is it not efficient?
That is what should happen. If you are talking of transformation in tax administration, that is what should happen in terms of policy. We have billionaires who don't have factories. Some of them don't have offices. How are we capturing those people? We have people who are riding Rolls-Royce, limousines. How many of them are paying tax? We have people who are building mansions in Abuja, in Lagos, everywhere. How are we capturing those people in the tax net? So this idea of just looking at this very easy way out, anything we want to do, you just clamp on the private sector for additional tax. We don't run an economy like that. The taxes that hurt any economy most is the taxes on investors. And look at this excise duty. I've never had it anywhere in the world where you impose excise duty on all services. We are now moving away from manufacturing and all of this. We are going now into services. How are you going to manage that? Are you not going to be posting custom officers into every bank, oil company, telcos, even TV stations to collect excise duty? These things require a lot more conversation by stakeholders. And it also help to enrich the quality of even the legislation itself. This rush, this very hasty way of pushing legislation across, I don't think it's most undemocratic.
So now we have election next month.
Yes.
We have census.
Yes.
And we're in 2023 now.
Yes.
Do you see this conversation holding even if the president does not give his assent to, this finance bill, the budget, I think, starts in March.
No, it starts in
Okay,
immediately the assent. Yes.
Supplementary.
Yes.
Immediately it is being assented
Yes.
to, and then so you have a lot of things happening now, but mostly you have politics dominating the scenario, different scenarios. So where does this come in from your perspective?
They are not mutually exclusive. I mean, this will not take time. Engage stakeholders to fine-tune the bill. This cannot take more than a month. It's not a big deal. So the engagement can take place. You don't say that because you want to miss some timelines and go and pass a bill that will cause a lot of problems for the economy. This is about investment. How can we give this kind of blank? Even tertiary education tax is now being contemplated to be moved from 2.5% to 3%. And we have an economy where the formal sector is carrying the entire burden of the economy. This economy is almost 50% or more informal.
Yes.
What is the model for ensuring that you bring those in the informal space into this tax space? Because what is happening now is that it is people who are in the formal sector, both the investors and the employees, that are paying the bulk of the tax. So we need to review all of these things.
Well, we'll certainly push.
And we also have some of the taxes are even pending. We have the NYC fund, 1% of tax. That one is still being considered. We have the tertiary health development levy, another 1%. I mean, do you want to kill the investors? This issue should not happen. We need to rethink all of this.
All right, well, right here on Channels Television, we always bring out those salient issues and ensure we get people like Dr. Muda Yusuf to help us say what the people are saying. And the people are saying right now is that perhaps there should be another meeting and conversation around the finance bill before it gets the president's assent, because if investors are scared off because of about 30% tax on profits from different areas, then the issue of unemployment might take a longer time to solve. But thank you so much, Dr. Muda Yusuf, Chief Executive Officer of CPP, for your time this morning. Happy New Year once again.
Yeah, Happy New Year. Thank you.
What a way to start the year, but it's the hot topics that make it here. We'll take a break and come back. 2 years now since the AfCFTA was declared. How far have we gone? We'll find out after break. This is Business Morning on Channels Television. You're welcome back. Well, it's 2 years since Nigeria declared the AfCFTA year. That was 2020. Nigeria declared that year the year of AfCFTA. It's 2 years now. What have we achieved? We do know that countries like Ghana and Kenya have started trading on that platform. Let's get up to date with how Nigeria is doing with Frederick Moises, the co-founder of Jobs Africa Foundation, joining us from Switzerland. Good morning, Mr. Moises. Happy New Year, first of all the way from Switzerland. Good to have you on the show.
Good morning and Happy New Year to you, Ini, and thank you for having me on your show.
Yeah. Incidentally, we share the same time with Switzerland. So, I mean, you did get into the new year before us. We entered the 2023 at the same time.
Yes, we do. Actually, it's winter time.
Yes.
So we are on the same time, the same time zone.
Yeah. So just before we get into AfCFTA, since this is the first working day for Business Morning, not for Nigerians anyway, tell us, how would you describe economically there? How would you describe the year 2020 from your perspective in Switzerland? We know about Nigeria.
Well, it's been quite a difficult, let's say, sort of period. As you know, it's a period that coincided with the pandemic, and a lot of supply chains were disrupted throughout the world. And so you've seen countries, really trying to look inward and see what is it that they can do to make sure that they are able to produce a lot of the goods and services within the country itself. And Africa, I think it was some sort of awakening for a number of African countries that are dependent on imports, especially when it comes to food, rice, and a lot of goods that, as your previous speaker was saying, a lot of goods that are necessary to produce within the country itself. So with the disruption of the supply chain, it has been a very difficult time for business, but also it is a time that also created new opportunities, particularly within the digital arena. And so whereas there were challenges, there were opportunities as well.
So now let's delve into the African Continental Free Trade Area. It aims to create a single market for Africa, about 1.4 billion. That's a huge market, combined GDP of about $3 billion. And then on the 30th of May, the AfCFTA officially entered into force. How far so far, 2 years after, for Nigeria, that is?
If you go back to 2018, when many countries, including Nigeria, actually it was 44 of them in Kigali, Rwanda, when the trade agreement was brokered, and 44 countries said, this is what Africa has always needed. We need to move towards a single market, because when you go back to the 60s, the leaders of the time were confronted with a dilemma. Do we keep the colonial borders, or do we tear them down and move straight to the United States of Africa? That was not done, and it was felt that we should move progressively. What has happened is that Africa has been punching below its weight. Just to give an example, based on the figures that you've just given, Africa's contribution to global trade is 3%. A country like Singapore contributes 6% to global trade. The combined GDP of Africa is 3 trillion. The GDP of a country like the UK is 3.2 trillion. So you can see we've really been punching below our weight. And so for us to count and to move towards the aspiration of our forefathers, and this is also in Agenda 2063, moving towards a single market, having a prosperous Africa that is peaceful. You know, you have all the challenges when it comes to conflict within the continent, and the continent that is driven by the people of Africa and who play an important role in the global arena. So I was very pleased to see a country like Nigeria join by ratifying this agreement, because as the #1 economy, it is important that Nigeria leads by example. You did mention that 8 African countries have started the pilot initiative: Ghana, Kenya, Rwanda, Egypt. You have Morocco, you have Mauritius, you have Tunisia. All those countries, and Cameroon, all those countries have said, why don't we start ourselves, start trading actually under AfCFTA, where tariffs are removed, and address all the challenges so that we can show the other countries that this is something that can be done.
So I know that some of those details for AfCFTA is that there'll be 90% tariff liberalization, and then there'll be additional 7% for sensitive products. But countries like Nigeria are afraid that they may become dumping ground for some other African countries. What's your take on that?
It is a challenge, and of course, listening to your previous colleague, a lot of countries also depend on the tariff in terms of government revenue. But I think it's a give and take. An integrated Africa, the gains are much more than what we lose. We've got to give something so that we can gain in return. And 3 trillion economy combined GDP, I think, is too small for a continent that has more than 60% of the world's remaining arable land, that has the youngest population. We are 1.4 billion, as you mentioned. By 2050, Africa will have a population of 2.5 billion. So I think what we will gain by ceding some of these benefits, the revenue that we collect, is going to be much more than what we lose. So it's a little sacrifice for the time being, but the gains will be so much that all African countries would want to be part and parcel.
Okay, there's also the issue of sentiment. Sometimes it seems like a lot of Africans do not have confidence in products and services that originate from African countries. They prefer things from outside the country or outside the continent. How do we handle that kind of sentiment?
That is a major challenge. I think we need to change mindset. I know there are a lot of campaigns throughout the continent in terms of African solutions for African problems, buy Africa, build Africa. And if we are able to increase the productive capacity of our company, if we are able to support entrepreneurs within the continent, if we are able to build standards that they are supposed to meet, so that, of course, you avoid the question of dumping that you mentioned. There have been products dumped from other continents. So we need to put in place a standard system, a quality system, so that products are able to meet certain standards for them to be traded within the African continental free trade area. So when, of course, we have to start from somewhere, we have to improve, we have to have promotional campaigns that it is for our own benefit that we promote products from the continent. We need to change mindset that what comes from abroad is not necessarily of the best quality. Our people can do it. To give an example of the car manufacturing industry, for example, we are seeing a lot of companies in Nigeria, in Ghana, in Kenya, going into this production line. And I'm sure by improving the quality of the product, they can not only be able to compete within the countries themselves, but also within the continent. And as your former speaker mentioned, also compete internationally. Because we need to add value to our product.
All right. Thank you so much, Mr. Frederick Muisa, co-founder Jobs for Africa Foundation. Thank you. Well, 3 years after it came into force, 2 years in Nigeria, we do hope that 2023 we will see more fruits of the AfCFTA, you know, in Africa and, of course, in Nigeria. Thank you so much and enjoy the rest of your day.
Thank you, Edie, and have a happy good year.
Happy New Year.
Happy New Year, sir.
Yes. All right, now let's switch over to the markets. The markets in Nigeria are not open today. It's a public holiday in Nigeria. A lot of you are out there, but we still bring you what happened last week. As we saw at the beginning of the program, it was a colorful closing of the gang on Friday, but Will Ibong has more details. Good morning, of the market, fixed income market. I guess that's what. Yes. Happy New Year.
Happy New Year. It is a bright year, and I pray definitely good news, but not from the forex market, but from the equities market.
Yeah, the equities had a lot of positives
last year. It's more like they set the tone, and I hope they just, you know, carry on this year and, you know, push through, at least for the first quarter. Let's just see.
I don't know if you listened to Mr. Popola, you know, when he said that, well, the market goes up and down. So we ended up. I hope we don't go down.
No, definitely. That high note, we'll just hit it, keep going, and probably just, see profit taking, as usual,
Okay.
take place in the markets.
All right.
Good morning. We start with the forex market. We did see some increase last week in the forex reserves, which is great. It recorded its second increment after 15 consecutive weeks of decline. Now it rose by $122.40 million week on week to $37.09 billion as at December the 29th. Now, last week, forex market transactions closed in the negative, down by 48.12%. What we saw in the FX sport, futures, forwards, and the total derivatives market was also down 78.61%. And we're hoping that investors will probably come into the market. We don't know what's driving this, but we'll probably know in the course of the week. Now, in particular, we saw a continued drop in the value of the Naira as it fell further by 1.58%. The Naira fell to 459 Naira 92 kobo versus its previous close of 452 Naira 76 kobo. And in the fixed income space, we saw sell-offs dominating the bond market last year. Also last week, saw average benchmark yield dropped by 37 basis points to 13.31%. And this is due to buying interest at the short and long end of the curves. But we have Okikioluwa Oladipo to tell us more about this. She's a global market associate, Parthian Partners Limited. Good morning, Okikioluwa. It's good to have you on the program.
Multiple stock, and when you look at multiples now, forward.
Okikioluwa, are you there? Can you hear me?
Where they were after the
I'm here. Can you hear me?
I can hear you. Good morning. Good morning. Happy New Year to you.
Yeah, Happy New Year.
So it's talking about the continued drop in yields in the fixed income space. Talk about the bond market, which closed on a low note. And we also seen the Treasury bills market experiencing significant sell-offs last year, and with yields climbing to double digits, but it fell on the long end of the curve, but it fell in December. We saw it drop to one digit. Now, week on week, we saw the sell-off right after the NTB auction last week, where there was a drop in stop rates across all tenors. Can you tell us more about why that happened?
All right, yes. So looking at activities last week, the week started somewhat quiet, and that was because of the auction that took place on Wednesday. But looking at the outcome of the auction, we had a high level of oversubscription. That was about, and allocation was like 0.2 times of the subscription. And, when we have an oversubscription like that, looking at the secondary market, it dovetails into the secondary market. And that was what took place. But we saw interest actually on the short to mid end of the curve. And looking at OMO, we saw interest on the long end of the OMO bills. There was also an auction that took place for the OMO bills last week. And also, I would look at the fact that looking at the level of liquidity we have in the system, right? We see market participants trying to utilize the idle funds and, buy into the market. So the fact that we have demand alongside liquidity in the system, we see the rates, going downwards, trending downwards.
And so now that we're back to the single digit for the NTB, that's Treasury bills, single digit interest rates, what should we expect from the fixed income markets this new year if the market opens tomorrow? Do you think the trend will continue, or do we see an uptrend in yields?
Okay, for now, looking at this week, we expect the trend to continue. When I mean the trend, I mean the downward trends, because the liquidity we have in the system is still quite buoyant. And although we have a maturity, OMO maturity tomorrow, I think that's a 10 billion, although not so significant, but putting into consideration the existing liquidity we have in the system, we still expect the bullish trend to persist this week. So I don't think we're going to see an uptick in the rates coming in anytime soon. But for the week, I would say we'll continue to see downward trends in the rate.
So if we're talking about downward trends and you're seeing investors moving to, do you see investors moving to the equities market now that the equities market closed on a very bullish note, 51,000 points for the all-share index? Do you see investors wanting to position themselves for Q4 earnings?
Okay, so, it's also a new year, and they'll definitely have to table some factors, put in, their, look at their appetite and their preferences, I would say, into consideration before making any decision. But yeah, I think it's going to be two-way to see some people still in the fixed income market and definitely some people going into the equity space.
So what are the factors do you think is going to drive investor sentiments this year? Just talking as an expert, especially looking at the global market and looking at the trends that's going on in the world right now. What do you think are the factors that are going to drive investor sentiments this year in particular? What is going to make market movers come into the market and play on a risk-on mode and not on a risk-off mode?
Okay, this year, 2023, we all know it's an election year. So that's one factor that's on the table when it comes to investors taking a position. Also, another thing to look out for is the liquidity we would have in the system alongside decisions by the MPC that's in, either continuing the hype we've been seeing in the rate and also, the level of inflation in the system. So all these factors put together would give investors, would I say, a direction as to the right direction to face, putting all these factors into consideration.
Well, you see in the environment where there's high inflation, rising cost of inputs and cost of operations, I hope businesses are going to probably open on a new note, Okikulu, and probably will see more investors flow into the fixed income space, maybe not into treasury bills market at the moment, but maybe in other segments of the market. Thank you, Okikulu Oladipo, Global Market Associate, Parthian Partners, for joining us on the program.
Thank you. Bye.
So, Ini, that's what we have for the market. So, we're seeing a downtrend in the fixed income space.
Don't look so bad, Will.
Yeah,
comfort yourself.
Yeah,
you can't win it all.
Yes.
I mean, you have the equities.
Market.
You guys are shining, even on the global space, you know. So, I mean.
But we do have investors in the fixed income space. You've got to be worried about them, can't I?
They can move to equities, and then when the fixed income is back, they can move back.
Oh, yes, that's a point in it.
All right, Will, thank you so much. And then in comes Laddie with another market. I don't think it's
performing market.
So the worst performing?
One of the worst performing markets
for 2022.
Globally. Yeah, for 2022.
Oh,
that's
how heartbreaking.
The crypto
I was
space.
telling Will, I mean, they can move from the fixed income space to the equity space, but I don't know where they will go to from crypto.
Stable coins, really. And obviously, we know the story about stable coins.
Even because the stable coins have gotten affected in recent times. So.
But obviously, 2022 is the year, most investors in risk assets want to forget quickly, especially the crypto market. We've seen fear most part of 2022. But, 2023, who knows? Who knows?
It's a new dawn.
Who knows? Maybe this might be the year. See the market sentiment there, 28 points, fear, still fear. Just same thing we had most of 2022. Let's look at the market cap this morning, 799, trying to get back to that $800 billion market. It's up 0.61% this morning. We'll see volume traded down by 5.84%, and Bitcoin dominance still standing at 40.09%. Let's look at the price of Bitcoin from 2017, New Year's Day, up till now. We see 2017, Bitcoin was traded at $998. That's January 1st, 2017. That was the price. 2018 was up 14,000. Big move from $998. And 2019, we had a breakdown there to $3,692 per Bitcoin from the 2018 high there. Then 2020, we had Bitcoin trading at $7,195. A flip over now, 2021, $29,022 there for 2021. That we saw a breakdown there, moved up. 2022, we saw Bitcoin trading 1st of January, $46,319. Then fast forward, we're here now, 2023, $16,678. But if we look at this price at 2023, still way above where we started at 2017. But if we go down further, obviously the prices were still, much lower. So Bitcoin definitely has come a long way right now, even though we're at about 65% down from the last high. Let's bring in Gilbert Jopata, our financial market analyst. Hello, Gilbert.
Morning.
Morning, Gilbert. Happy New Year. Great to have you. And obviously, what's on the mind of investors now is what is in store for Bitcoin in 2023. What are you seeing?
Okay, there are a whole lot of things we should be looking at, but paying attention to the macroeconomic outlook and the risks of a recession and the money print has been on. It seems like 2023 turns out to be a tough year in regards to asset pricing for the cryptocurrency market. I would have hoped to see otherwise, but there is no sugarcoating for this. But away from price action, I read a report that described DeFi as a broader trend of Web 3.0, and I agree with that. And meanwhile, we could also see Amazon, Apple, Facebook, Instagram integrating blockchain and non-fungible token to its platform, which this is actually huge for DeFi. So I actually expect a huge interest in DeFi this year. We are going to see a trend shift towards DeFi. Binance also announced that they were investing heavily into DeFi. On the other hand, I really look at regulation and tax is going to come into more full enforcement or having the right regulatory framework. You know what happened to the likes of Luno, FTX have actually drawn the attention more of regulators. The attention are presently in the market, and they will actually have the right framework and will have the presence of regulators in the industry this year. And also another trend I'm looking at is the NFTs and the metaverse. We have seen Walt Disney, even Donald Trump, Facebook, Instagram are all big players right now in the NFT and metaverse community. And then one very major place I think we should look or pay attention to is the fact that I expect more institutional investors in the industry. Because if first of all, we are able to pay attention to the price action, you know, when institutions come in, they have actually their structure at which they enter into the market. And if we pay attention to DeFi and market cap increasing, we know the fact that regulatory framework is in place, because regulatory framework will create more like a legal playing ground for more institutions to come into the market. We also pay attention to NFT, the metaverse, and institutional investors. And these institutional investors I'm now looking at is those who come in with a long-term mindset. These are fundamental investors. The disadvantage of these fundamental investors coming into the market is that they are going to increase the cost for institutional investors to buy in. For example, if the price of Ether is at $1,000 and once institutional investors start accumulating, they are going to increase the cost. We may still be in the bear market, but Ether may stabilize strong at $1,500 or even $2,000.
All right, Gilbert. Well, we'll keep watching, and obviously we'll keep tracking, you know, tech coming out from the crypto space going into 2023. Thank you so much, Gilbert Jopata. Happy New Year.
Yeah, wishing you same.
All right, so Ini, there we have it. We're starting the year off at about $16,500 for Bitcoin.
Well, we shouldn't give up. I think we've been here before, going by the analysis, the price action that you showed.
Every new year. Up, new high, new low, new high. New
well,
low.
it's a market. Everybody wants to make profits, and when you make profit, you don't leave it in the market. You get it out and look for another opportunity to come in. So, I mean, I guess that's just it.
All right. 2020, just thought I'd be looking out for what plays out.
Yeah, sure. All right, Lucky, thank you so much. Well, that's it on the program. This very first one in the year 2023. Don't forget, we have about 259 more to go. 1:30, Will Ibon will be here to give you an update from the world of business. That'll be Business Incorporated. And the markets are closed in Nigeria today, so there'll be no stock market report. But tomorrow, I'll certainly be here, by God's grace, at 10 a.m. to give you a new dimension of what to look forward to in 2023. I'm Ini John Mecca. Let's do this together in this year, 2023. This is just the beginning. Have a good day.